Welcome back, everybody. Time for today's three-stock lunch. Here with our trades, Malcolm Etheridge, CIC Wealth Executive Vice President, also a CNBC contributor. Let's start, sir, with Pfizer. The stock slipping a bit today. News regarding Pfizer's $43 billion bid for Seagen, a Seagen drug to treat bladder cancer, succeeding in a study. So, Malcolm, how do you feel about Pfizer?
Yeah, Tyler, I'm not the biggest fan of Pfizer here. The stock's down more than 35% this year primarily due to waning interest in COVID-19 vaccines and boosters, right? And that trend is extremely unlikely to reverse at this point, which means that Pfizer's got to find new drugs to add to its portfolio to try and stem some of that declining revenue. But when you couple the declining interest in the suite of COVID-19 drugs that include Paxlovid with the fact that they've got several important patents that are going to roll off in the next couple of years, right? You think about like Xeljanz, for example, which is a marquee for them. It's something like $5 billion or more of revenue per year on its own out of the $67 to $70 billion they've guided for the year. They've really got to find an aggressive new portfolio to take the place of a lot of the drugs that they have that are going to be rolling off here. And I just don't think they're going to be able to do it fast enough.
All right, leaving Pfizer aside, then what about Baba, as Tyler was talking about, Alibaba, the stock rising on those reports about China easing ownership limits. Would that make you a buyer here?
Yeah, I'm actually not sold, right? How often do we see the Chinese government trying to play nice and then, not very far after that, the tone changes a little bit depending on who you hear from, right? So the company's been facing several regulatory challenges that are unlikely to clear, in my opinion, from the CCP, who has hit them and other tech behemoths in China with billion-dollar antitrust and anti-monopoly suits that even if they come out victorious on all fronts, which is unlikely, but it's a big distraction operationally. So if you just think about that, plus the fact that the new CEO of the cloud division, which was the crown jewel of the 6 newly formed subsidiaries, has just recently resigned, it's unlikely that they're going to be able to spin that out and IPO it, which obviously was a plan to try and return some capital to early shareholders, and maybe the grocery division would spin out and follow it behind it. So I don't see that one as a plan that's going to actually be able to happen, even if the CCP is able to play nice for a little while and allow them to execute that master plan. So I don't see Alibaba as investable right here.
All right, let's talk about a company that in a way kind of almost a little bit feels like Baba, and that would be eBay, an eBay-backed European classifieds company. Advinta jumped the most it has in 3 years after saying it received a private equity takeover proposal that would rank as one of the year's biggest buyouts. Malcolm, what is your trade now on eBay, sir?
Yeah, so I actually could be convinced to be a fan of eBay, primarily because they're a pretty good steward of capital, right? They've shown their willingness to take that excess free cash that they have, something like 24% excess free cash last quarter reported, and actually return it to shareholders, right, in the form of buybacks and also about a 2.5% yield on that dividend. Makes it pretty attractive when you just consider that it's the only one of the more niche online retailers that actually is in positive territory for the year. I think if you compare it to somebody like an Etsy, for example, who's down 40-ish% maybe for the year, it's the only one that's actually performing positively in that online marketplace business. And I think a lot of it has to do with the fact that eBay is really just the only grown-up in that space. It's the one that's a little more seasoned when it comes to operating. And I think if I'm going to choose one, especially as they make this pivot into online ad sales, eBay would definitely be the one I think is the most attractive of all of them.
Interesting, clear argument there, Malcolm. Thank you very much. Have a great weekend, Malcolm Etheridge. We appreciate it.